The U.S. stock market recorded a volatile trading session today when all three major indices fell simultaneously. The S&P 500 index lost about 1% and retreated to the 6,460-point area. The Nasdaq Composite Index fell more sharply, with a decrease of more than 1%, and closed around 21,455 points, while the Dow Jones Index lost only about 0.2%, but still maintained the important mark of 45,500 points. This decline mainly came from the technology group, especially stocks related to artificial intelligence. NVIDIA, the company, considered to be the leader in the field of valve, although it just announced business results that exceeded analysts' expectations, its stock turned to fall. The reason was that Alibaba, a large Chinese technology corporation, announced that it was developing its own AI chip, creating new concerns about fierce competition in the field that is attracting special attention from global investors. This is a clear demonstration of the market's sensitive psychology when enough positive business news is still not enough to keep stock prices under pressure from information about competitors. In addition to developments in the technology sector, the market is also affected by an important legal factor. The U.S. Federal Court of Appeals has just ruled that some tariffs imposed under the Trump administration are illegal, and if this is implemented, the U.S. government may be forced to refund billions of dollars to importing businesses. This decision could create chaos in trade policy and lead to unpredictable fluctuations in the coming period. However, looking at the big picture, August still brought many positive signals. The S&P 500 index recorded an increase of nearly 2%, and even set a new record at the end of the month, when it closed above 6,500 points. This is an important sign that the market's recovery momentum is still being maintained after the corrections at the beginning of the year. However, entering September, analysts are asking investors to be especially cautious. Historical statistics show that September is usually the most difficult period for U.S. stocks, with an average decrease of about 0.7% for the S&P 500 index. However, many experts are still optimistic, stating that with the market still above the 200-day moving average, the possibility of maintaining green in September is completely possible. Another factor worth noting is that the VIX index, a measure of market fear, is currently at its lowest level of the year and has fallen more than 70% since April. This reflects a relatively calm investor sentiment, but also the risk of sudden volatility as we enter the fall. It can be said that the market is like a calm lake at the moment, and only a small impact from economic data or unexpected news is enough to create strong waves. In addition, the real estate market, listed through REITs, is also having an impressive recovery, thanks to the policy of temporarily pausing interest rate hikes from the U.S. Federal Reserve. Many cash flows are returning to this asset group in search of stability, and this can be an attractive option for investors who want to diversify their portfolio and minimize risks. In the current context, Investment strategies need to be built on balance. Investors should continue to closely monitor upcoming macro data, including inflation reports, personal consumption expenditure indexes, as well as the employment situation, as these will be factors that directly affect the Fed's interest rate decision in September. If inflation remains under control and the labor market remains stable, the Fed is likely to keep interest rates unchanged, thereby creating favorable conditions for the stock market to continue to rise. However, with potential risks from the technology sector and trade policy caution is still necessary. A reasonable portfolio allocation, combining long-term growth stocks with defensive sectors such as healthcare, consumer staples or real estate, will help investors stand firm in the face of fluctuations. In conclusion, today's trading session is a reminder that the stock market never moves in a straight line. The decline in the indexes does not mean that the uptrend has ended, but it can be an opportunity for patient investors to accumulate more stocks at reasonable prices. September may bring many challenges, but at the same time it also opens up new opportunities for those who know how to manage risk and stick to a long-term strategy.